Welcome to Total Money Management. I'm back with Steve. How are you, mate?
Good, mate. Good.
This week we're chucking my water around. This week we're covering Feb 17 to 21. I think really what we'll spend a bit of time on today is the RBA cuts. Obviously, it's dropped by 0.25%. Yippee!
Woo. Big party times.
I know. And we'll hang around there for a bit, and then what I'd be really interested in at the end of this is if anyone has any questions, reach out, send them through, because we'll cover them in up and coming episodes that we'll record in future weeks. Because I want to start to get a little bit closer to what people are actually thinking that are listening.
Yeah. What the issue? Well, I think we've spent long enough going, the market's expensive.
Yeah.
And, to be honest, if you have a look at Monday, household equities are high. Okay, Tuesday's valuation have been more crazy. Okay, fund managers on Wednesday holding the lowest level of cash. Okay, Thursday, Warren Buffett selling stocks. What a loser. Okay. Friday, his margin debt is, the highest it's been. So I know that sort of sounds a bit boring, but what I'm trying to do is just give people indicators where in 10 years' time when Steve's dead, they can look at it and go, oh, okay,
You're not that old, mate.
Steve said this, in 2025, I need to keep an eye on this as an indicator.
Well, one indicator means nothing, but 5 indicators saying the same thing.
A little bit.
You've got to go, maybe there's something in that.
If you look at book values, right, which is the Q ratio, they're expensive. Okay, what about earnings? Well, you look at CAPE, well, they're expensive. What about debt? Well, yeah, there's a lot of debt and there's a lot of margin lending. Oh, okay. So, like you say, you've got 4 or 5 separate indicators that look at different parts of the economy and go, yeah, everything's in the 98th percentile or something.
The lowest level of short options in history or something.
Yeah, exactly. Exactly. No one wants to buy puts.
Yeah.
Except me. Although I missed out last night on the NASDAQ. But I'm going to go back and do it again.
Do it all over again. Doesn't like a gamble. All right, so we've got RBA cuts interest rates by 0.25%. And the question is it enough to spur more borrowing? Probably not.
Well,
yes.
Probably not. Oh, God, who knows? People just keep going crazy with borrowing for bloody property.
Well, have you seen these things now? A couple of things have popped up on my socials where you basically put 2% down. Some random company funds the 20% so you don't pay the LMI. And that's 10% per year. So if it's $1 million house, let's just say that's, 200 and something thousand, including stamp duty that they'll fund you with 10% per annum interest rates on that, and then your mortgage repayments. So you end up paying $750,000 by the end of it just out of your freaking bonus. The deposit, sorry.
I'm working on you and I have done stocks versus property.
Yeah.
And then we followed up with the second part, which was property problems. And now I'm working on the third part that you and I, as you know, are going to talk about. So and that will, cap it out. But a 0.25% is like, I think it's $100 a week. $100 a month.
A month, yeah, it's like $25 or something.
Which is like a cup of coffee per day. And in fact, it's not even a cup of coffee since it's like $5 for a cup of coffee. But that's another issue, raging inflation. But, does it help? I reckon personally, Jacob, that if you're struggling along and someone comes to you and says, listen, mate, I'll give you an extra $25 a week, I think most people would say, no, we're not going to spend it. We're just going to continue to hit the mortgage as hard as we can.
It's almost a kick in the balls, though. Oh, here's $25. It's like, well, fuck
It's
off.
token.
Yeah.
It's token, yeah. Now, remember, most people have got $1 million mortgage or even then some. So it might be, $180 a month or something. But in the scheme of things, it's not that much.
No.
Right? So I'm not sure that it helps anything. And I think the bigger issue for Australia is the election coming up.
That's when? September?
No, they've got to go by, good question, July, I think it is.
Is it July?
Yeah, so it's very, we're very close to it. So that, I think what happens now is a lot of companies sit there saying, okay, the election's close, Dutton looks like he's going to win, or it'll be a minority government, which is,
May 25.
Which is pretty ugly. So from that point of view, I think there will be not necessarily a capital strike, as in, companies won't do anything, but I think they'll just be a little bit more circumspect. Yeah. Because if Dutton gets in and goes, bugger climate change, right? Dutton's now sounding to use the Trump platform, right? Bugger climate change, DEI, right? Diversity, equity, and inclusion, right? Get rid of all those mad lefties. So if Dutton wins, then there'll be, substantial changes. He's talking about allowing people to use their super.
Yeah, I saw that.
Right, as a deposit. Right,
but isn't this the same bloke that denied all that stuff last time?
Oh, yeah, but that was last time. Who cares about last time? Yeah. But, you've got to wait and see how that pans out. But I'm surprised at the level of lending is still going. It's and I think I saw price to income now in property is average of about 10. Right, the long term average is 4 to 5. Well, that's a 50% decline. So and everybody's saying, "Oh, it'll never happen." It's like, look, we do this every time at the market top. It'll never happen, and then it happens. Right, and then there'll be some obscure like, oh, this was a one-off, and it's like, I know it's a one-off every time it crashes, right? Because you get fixated on the event rather than getting fixated on the things that matter, which is the amount of lending that goes on.
Yeah, well, it's still terrifying that 60% of the mortgage books, banks' books are residential mortgages. Yeah, so it's and again, everybody's talking about the RBA cuts, not in terms of business. Oh, good. That'll mean business will be able to borrow and invest more cheaply. No. Everyone's just talking about what it does to the mortgage market. Yeah.
Right. And so I think it was last week or the week before I saw a chart which showed that there's more lending for residential housing than there is for business or something like that. That was a complete inversion of history. I think it was in New Zealand. They're lending more for property than they are to business. So you're looking at it going, they're speculating like crazy on property and they're not even investing to make stuff.
Well, in New Zealand, property's come down a fair bit, right?
A lot, yeah, I think so, yeah, about 20% or something.
Yeah.
And Canada's, I think, starting to teeter a bit as well.
Yeah, well, they're one of the most expensive places in the world to live in Canada.
See, what they do now, Jacob, is they just keep propping it up with more subsidies and stuff until, like China, they just keep going, oh shit, how can we get more people in the market? Oh well, give them another 10 grand for stamp duty. Like Crucifilli, the Queensland Premier, came out during the week and said no stamp duty on a Queensland new build. Yeah.
But it's under a certain amount as well, right?
Well, probably is, yeah. I mean, it's under 800,000 or something. So, because he doesn't want to say, I'm going to build a millionaire's mansion at Bridgeman Downs and, by the way, I'm not going to pay $1 million stamp duty. But, again, what I'm saying is they're always looking for these ways to get people to borrow more money because I can tell you, most of them will know, mate, once the lending stops, that's it. It's all over Red Rover. Right? We live in a debt-based economy, and I'm not saying it's bad, but the old cycle used to be a business cycle. Business would borrow. There'd be like we talked about last week, the capital cycle. Right, it'd boom up, then it'd calm down. Right, you get a recession, clear it out, do it again. Yeah. Whereas now, in the last 20 to 30 years. The debt is going towards residential mortgages and they're no longer a house. It's an asset, right? And so it's like saying people are buying stocks not because, that's not a good analogy. Scrap that. People are buying property not as a place to live in. They're buying it as a speculative investment, right? And that completely changes the complexity of it because and we talked about this, 40 years ago, people bought houses as a commodity, right? Oh, yeah, just going to live here and work in the factory. I'll be here for 40 years. You should paint it. Yeah, one day. It's irrelevant. Whereas now everyone talks about renovating and depreciation and, all of this stuff that you hear talking about factories, right? But they're not. They're talking about their residential properties, their investment properties. And so that's why it's become really, really difficult for Australia because our economic growth is miserable.
It's not adding to the economy at all.
Well, we're not making anything.
Yeah.
All we're doing is building buying each other's properties for a higher price.
Yeah. Well, if you build a property in Brisbane Downs for 800,000, someone will probably build it, sell it the year later because every other house is worth 1.4. And just arbitrage it.
Yep. Or people are saying, "Oh, great, we'll build another one and borrow against that one."
Yeah.
Right.
This is never going to fix the problem.
Wealthy people will say, "All right, well, we'll build a house out there. We've got the money. We'll build it. You know, the son will get the loan, and they'll get less stamp duty."
Yeah, true.
Right. There's all that sort of stuff.
Well, Albo said that foreigners can't buy for a couple of years.
Oh, yeah.
Which is probably not going to help very much either.
Well, it's not going to do anything.
Yeah.
You know, I think that's. Do you know what I mean? That's a token effort for the election.
Yeah.
Albo's worked out, right? Albo and Labor at Chalmers have worked out there's two issues, housing and inflation, right? And I'll tell you a story. I went and had breakfast with a mate of mine on Wednesday, right? And he brings along a Lindt chocolate, you know, those thin packets of Lindt chocolate, right? And he puts it into his coffee and makes a mocha, right? So he says to me on Wednesday, I used to buy them for home, right? I think, I'll get myself a chocolate and have a piece a day or something, right? And he said to me, well, no more of these fucking coffees, you know. And I went, oh, right, what's the problem? And he said, hey, guess how much these chocolates are, right? At Woolworths, right? And I went, $6. I stopped buying them at $6.50. I said, it's bullshit. It's outrageous. $8.50, right? $8.50 for this. I'm not kidding. I could eat it all in one hit, right?
Yeah.
But my point being, you're looking at that, everything's really expensive. And what Albo doesn't realise the impact that's having on people, right? Because they're saying, oh, yeah, but wages are growing. And it's like, mate, inflation, petrol's $2.20, Lindt chocolate's $8, bread, there's no eggs anymore, right? And all of this sort of stuff is really expensive.
Yeah.
Right? And then on top of that, you've got people who are struggling with the mortgage. So it's a double whammy for a lot of people.
Yeah, I just can't see, even with a change of government, how they're going to do anything about it. It's like they don't really want to.
Well, they can't, Jacob. They can't. This is why I keep saying, if we could wave a wand and fix it, well, it would have been done 45 million times in history before this point.
Yeah.
And again, they're barking up the wrong tree going, oh, it's a supply issue. It's not a supply issue. The issue is people are not paid enough to afford a mortgage. There's not affordable housing. Well, it would be if you paid people, if wages had kept in line with house prices.
Yeah.
Right? So if the Sydney property, which is now 1.4 or something, I mean,
the median.
Crazy, right? If it was price to income of 5, it'd be 700,000.
Yeah.
People would be going, oh, well, we can do that. We can borrow 6. But it's 1.5, right? 1.4. So people are going, we've got no chance.
No.
And they haven't. You think by the time you need 1.4, 2280, $300,000.
Yeah.
And people are on a combined income of like 140 or 150.
Yeah.
It's crazy. It's absolutely crazy. But they're going, oh, no, the problem is we haven't got enough houses. No, it's not. It's not. The problem is the inequality and, the wealthy people are buying more and more of the houses because they're outbidding the poor people.
Yeah. Even if there were more houses, they'd all get sold to the wealthy.
Because they're in the mode of housing as an investment.
Yeah.
Most of them don't know about the stock market. Right, so they go, hey, it's just easy, just buy an investment property.
Stick someone in it because there's a shortage, so you're always going to have a tenant.
That's exactly right.
Yeah.
Banks willing to throw us a couple of million, yep, righto, go for it. And that sustains the momentum like margin debt sustains the stock market.
Yeah.
Right, you've got to have new money coming in to pay the higher prices, and that's the same in housing, right?
All right, well, let's go back overseas. So we've got US has been meeting with Russia without Ukraine.
Yep.
What's the news there?
Well, Donald and Vladimir are still talking. The argument there, it's a pretty interesting one actually, because there's one, generally the left side of politics is going, oh my God, this is a disaster because, they're going to abandon Ukraine. It's all over. Donald Trump's friends with Putin. That's one side of it. The right wing of politics, the sort of MAGA people or, Trump supporters, they're saying, well, this is a good thing because we're spending too much money on Ukraine and, we don't get anything out of it. So what are we doing about it? So that's the Trump camp going, we don't want to be the world's policeman anymore. So therefore, why the hell should we protect Ukraine? What do we? Yeah. And that's why Trump's saying, well, we want half the minerals. Right? Because he's saying, well, hang on, we're spending all this money and you blokes don't do anything. Yeah. And Europe has been at fault for that. Europe's been decreasing military spending. The Americans have told them every single goddamn time about Putin. And the Europeans are going, yeah, nah, it's all right. Ha, we know what we're doing. Blows up.
Yeah, yeah.
And now Europe's really struggling.
Yeah, well, it feels like they've been struggling for a while now.
Yeah, they have since the GFC. Yeah. But part of it, Jacob, is too, there's 25 countries in Europe now or something. I mean, God, it's like herding cats, right? Like you sort of roll it off the tongue, Europe, right? And you think, America, right? But Europe is France, Germany, Austria, Sweden, Spain, Finland, all these bloody countries. And you go, oh, man, imagine trying to get all them in the tent.
Yeah, yeah.
Right? And you've got Poland up there going, oh, Jesus, the Russians are going to invade us. They're a former Soviet state, so they're spending 5% on GDP on military. Then you've got down the other end, you've got Portugal, who's like, oh, man, they're so far away. We don't, who cares about the Russians? They've got to get through 40 countries before they get to us. And they're having siestas and all this sort of stuff. So you just look at it and go, oh,
such a diverse bunch of people
absolutely.
And governments.
Yep. And they don't have a monetary union as well.
Yeah. Right?
That's for another time. But that's a really big problem.
Well, speaking of diverse and wild governments, you got Musk and Dog, whichever it is, calling out all the unnecessary spending from the US. I'm more interested in how that's going to affect the economy and more so the psychology of investors going, shit. What?
Yeah. Most Americans, the problem is, and again, sorry, this is to drift a bit philosophical, but you get waves, right? And America is at the moment, and it has been for 20 years, losing trust in institutions, right? The government, okay? So the government are worse than car salesmen, right? That we're always the lowest of the low, right? Yeah. And now, Biden's are corrupt and Trump's corrupt and they're all corrupt and the police are corrupt, right? So this is part of the cycle where what happens is the people, the ultra wealthy denigrate government so they can do those functions. That's what Musk is doing. Musk and Trump are trying to take over the government so they can do what they want to do.
Yeah.
So far, what's happened now is Musk has gone in there and said, right, sack all those people. Then what's happened is the people who voted for Trump have now lost their jobs or they don't get any more services. So they're now going, hang on a second, I didn't vote for this. And it's like, this is part of the deal, right? Because they got that bloody megalomaniac Musk in there who doesn't have a clue about bloody macroeconomics, right? Talking about the American government going broke. It's like, that's like, it's so stupid. Yeah. But there's a lot of people who believe that.
Yeah, because he's a powerful figure.
Well, yeah. And it feeds in. Yeah, I knew government were corrupt. Look, Elon found, $1 million or something. Now, most of it is bullshit that Musk is highlighting, right? Most of it is garbage. But again, the point is that most Americans think their government is untrustworthy.
Yeah.
Right?
It's such an easy card to play as well.
Absolutely. And Trump there's two things going on. Trump is now manoeuvring to say, we're not going to have another election. Now, I'm talking pretty serious stuff here.
Yeah.
Right? He wants to be. This is why he's putting all this stuff with. I'm the king. So he's starting to talk like monarchy,
Yeah,
right?
yeah.
But I think what happens is, and it started already, first off, he's only been in a month,
Yeah.
right? It's only a month. Now, his popularity is declining precipitously, right? Because now people are going, hey, hang on, I didn't want my immigrant friends being deported,
Yeah.
right? Well, that's what you voted for, buddy.
Well, it's a bit dictatorship-like.
It
right?
is.
Yeah.
It is. So that's why he's writing all these executive orders,
Yeah.
right? He's getting around Congress. Now, part two, those congressmen are saying, listen, you got this bloody moron Musk running around cutting all these departments, and people in my state are saying to me, what are you doing about it? Well, Musk is unelected.
Yeah.
He doesn't give a shit, right? He doesn't care because he's not up for re-election in 2 years,
Yeah.
whereas the Republicans are.
Well, he's worth $400 billion, doesn't matter.
Yep.
Just sail off into the sunset.
But there's no accountability,
Yeah,
right?
exactly.
The Republican congressman goes to Trump and says, listen, mate, we're going to lose Alabama because, you're cutting all these jobs, right? And then they do something. Musk goes, who cares? I don't care about Alabama. I'm just going to keep
Efficiency.
going,
Yeah.
right? So there's that problem. And as I said, the big one is people are now starting to realise that they're losing friends and jobs, and there's less money in the economy. So therefore, unemployment will rise. They may well trash the economy. And so if that happens, you get a lot of chaos, but you also get a lot of people who, if they do manage to make the midterm elections, then the Republicans will get thrashed in Congress and the Democrats will take over, and then you'll have more of a fight between Trump and the Democrats.
Both sides, yeah.
Right? So this is why the argument is this election, this 24-28 to 28 is really critical, because this is the sort of bottom of this cycle where things get so bad that there is a national emergency and they've got to rebuild again, right? Now, just to give you an example, Musk sacked a group of people in the Department of Energy, right? And they went, righto, that's it, you're all finished, go home. Those people they sacked are the people who look after the nuclear arsenal, right? So they sacked them on Thursday. On Friday, they had to try and hire them back because they went, oh my God,
shit.
we've made a real mistake here,
Yeah.
right? You know what they did? They couldn't contact them. And you know why they couldn't contact them? Because they'd sacked all the HR people who had the contact details, right? Now, these people look after the nuclear armaments. And the guy said, mate, the Department of Energy is the Department of Nuclear Management.
Yeah.
Right? So in other words, Musk has gone in there not knowing what the hell's going on. What Musk is doing what he did to Twitter. He went in there and went, right, I'm sacking 70% of the workforce and got rid of them. And look at, Twitter's still, X is still going. That's what he's doing. He's going in there, again, under this misled assumption that the government's full of all these wasteful people, so just sack them all and start again. And then it's like, Elon, the lights are just gone off,
Yeah.
right? But because they're such megalomaniacs, they can't admit they're doing wrong.
Well, they can't, they genuinely don't believe that they can.
Well, yeah, and they double down,
Yeah.
right? It's that perversity of doubling down on mistakes. So, that's where I'm really concerned. I look at that, go, oh man, and they haven't even got to the court cases yet, right? But you can see the Supreme Court's going to be an issue. It's, as I say, I've been at this for 40 odd years looking at politics and markets. This is the most concerned I've ever been because it's crazy stuff. It's really crazy stuff.
Well, I can't wait for this clip to hit the socials, because usually Trump and Musk clips go absolutely gangbusters.
Well,
so you'll be hated
that's
again.
how that's an example of the divisiveness of them, right?
Exactly, yeah.
It's like property. It's like property. Oh, you know what you're talking about? It's all good. Mate, we love that stuff. We agree property's terrible, right? Yeah. It's just the greater division.
Yeah.
And
it's driving that wedge.
Yeah, Trump and I had a look at there was the guy who wrote Elon Musk's biography, right? He said, listen, Elon Musk is not a genius. His IQ is about 100 or 110, which is about average, right? So I thought, oh, this will be good. So I looked at the replies. Oh, you don't fucking know what you're talking about. He's a genius. What have you ever done? You're not worth 400 billion. Yeah. Like all this stuff, which is just like, oh, wow.
They look at his net worth and that's how they value him.
Yeah, yeah. He's the smartest man in the world. No, he's not. He's a con man. Read about him, right? Read about him. Full self-driving, 2014, right?
Ba-bow.
10 years later, we still haven't got it, right? Then Grok 3 or whatever his stupid AI is, right?
X thing.
Going to be smarter than a human by the end of the year. Pfft, really? It can't even name the parts of a bicycle properly when you ask it. I mean, please, just stop this shit. But this is what you get.
Never going to stop, mate.
Well, it did at the internet, right? I'm raving. I know I'm raving. But it's the same with the internet. Oh, it's going to take over the world. No one's going to shop. Oh, right. Okay, boom.
That's all right. We haven't made a podcast in a few weeks.
Yeah, I'm just getting it off my chest.
All right, but
sorry, folks, but that's the way it is.
Let's talk about Monday for a second. We'll fly through this next because it's all the market's expensive, really. But Monday, retail investors when it hits 55%. So the chart you can see here, we've seen typically a large decline.
Yes,
right. So it's at 54% about now.
Yeah, look at 2000. Right, it's above. It's about 52, 53.
Yeah.
What I'm signalling there is retail investors are always the last ones in the tent.
Yes.
Right? And if you quickly run to, I should have put these in order, Wednesday.
This one?
Yep. Fund managers' cash allocations are at the 15-year low.
Right. So the people that know what they're doing.
We're all in the tent.
Yeah,
right?
Yeah.
So that's what I'm saying. There's margin lending booming. A lot of retail investors are in.
Fund managers are cash allocations that are 15-year low, but this old bloke's at
a 15-year high.
It's a 15-year high, but everyone's calling him a dickhead.
But look at that. I mean, Warren Buffett is out of step with markets. Berkshire Hathaway keeps selling stocks. If an old guy at 95 came and said that to me, I'd be thinking, geez, I might want to have a look at this.
Yeah.
Might want to have a think. This old bloke's been through a few of these.
Well,
more so than a 25-year-old.
He's almost at a 50. It's in the bonus section, so we'll talk about it in a sec. But he's almost at a 50-50 allocation between stocks and cash now.
Yeah. Well, he's at a record.
Yeah.
And that's what I mean. And by the way, folks, he keeps buying energy.
Yeah. Value.
Yep.
But if you go back to this one,
he knows.
They'll call him an idiot.
Yep. I know. That's what I mean. That's why it pays to be contrarian.
Yeah.
But I also think, you got to remember, he's been around since, 95 to 35. He's been around since World War II.
Yeah.
Right?
Yeah.
So he's seen a lot of cycles, but he's also seen the political stuff.
Yeah.
Right? And like me, at 62, I'm sitting here looking and going, I remember this last time was in the late 70s and early 80s. Mm. Right? You're too young to remember. We had the Cold War. We had, nuclear concerns all the time, right? Because, we had the Bay of Pigs. Now, that's before my time, but there was a constant threat of nuclear weapons, right? Putin talked about it last year, threatening, tactical nuclear weapons, right? Well, the markets have shrugged all that stuff off, but it only takes one event that we don't know where markets suddenly turn around. What are we on, February 22?
Yeah.
Okay, February 21 last night, the US went down 1.5%. Now,
after another all-time high.
Yeah, I'm not saying, oh my God, run for the hills, but what I'm saying is there'll be a point where it starts to turn over.
It's
right?
the volatility that you see generally at market tops where it starts to move 1% or 2% up and down. And that's another signal where like, oh shit, it's not moving 0.2, 0.3 anymore. It's having big swings.
Yeah. So the Nasdaq went down 2.2%. The S&P went down 1.7%. Right? Bitcoin went down 2.5%. Gold went down 0.22%. Oil went down 3%. Right? So what I'm saying is you get this system, you get this time where things start getting more volatile. Now, when there's more volatility, a lot of traders or quant investors go, okay, I need to get out of this.
I'm going to sit out.
Yeah, right. There was one that did it the other day. Oh, can't remember who it is. Oh, yeah, a guy I follow. He said, this is crazy, I'm getting out of here. And he said, I'm just going to sit on the sidelines and wait.
Yeah.
Well, the old fella's sitting on the sidelines.
Yeah.
That's what he's doing.
He's got half in, but if it goes up another 20, 30%, he'll make a few billion. But if it comes down 20 or 30%, he can just feed the cash back in.
And that's what he did in the GFC.
Yeah.
Right?
Cool.
Right, just a quick one at the end here. That one, that's that one.
This one?
Yeah. Just China's property market is getting worse, yes. And again, it's what I've harped on about to people about the cycle, right, and the model that China uses, okay? But down the bottom there, okay, this is obviously bad news for those who bought at the top. As we say all the time, every Australian property is owned by somebody who bought it at a price.
Yep.
Right? So there's going to be winners and losers. As the chart shows, prices are now down 30%, right? Already the crash has destroyed 18 trillion worth of household wealth, right? That's a lot.
Yeah, and this is China, which is one of the biggest.
And the same thing happened in Japan, right? They had a property bubble, they had a stock market bubble, and the Chinese used the same model, right? And that's why, look up there, Tier 1 cities reach eye-popping multiples of 50 times earnings, right?
By comparison, New York, they peaked at 14 times.
Go and try Australia. Sydney is grossing 3% in rental yields, around there, right? Okay? 100 divided by 3. That's a PE of 33. Do you want to pay a PE of 33?
Absolutely not.
Well, that's what people are doing. Right? Well. And that's what I'm trying to point out. And I'm quite happy to look like an idiot for 12 months or 2 years or 3 years. But I can tell you there's going to be a lot of people who lose a lot of money.
Yeah.
Right? It happens all the time. The smart ones get in and get out.
Yeah, well, that's it, right? The people that have already made a lot of money, they've got 3-4 properties and made a lot.
Yep.
If they can get out, then again, you're sat with the newbies that lose their pants.
Yep. Because there's this fear of missing out altogether. And so, like we started with, the RBA cut 0.25. Whoa, it's time to get back in. It's like, really? Are you serious? 0.25? I mean, we're talking about a 30-year loan.
Yeah. Well, the average is, 4?
4.5 or something. I mean, it's just crazy. And that's why I'm concerned, because this era is over of cheap money. And somebody always gets left holding the bag.
Yeah.
Right? So,
all right. Well,
sorry to end that on that sad note. But
no, it's good to get some more context, particularly like with the property stuff, because the most questions we get, or the most disagreement actually, is on property and politics. So it's good to just give our or your side and my side of things, and then allow for that conversation. So, all right. Again, if you have any questions, reach out through the socials, and there's plenty of resource on the website. So download things there. All right, Steve. Thanks again.
Cheers, buddy.
Cheers, buddy.
As always, remember, we don't provide financial advice.